Let's look at the second section of the of chapter 1, and that is, of course, more financial crime. We're going to look at market abuse. Now, if you have taken other CISI qualification before, you'll notice that CISI looked at market abuse and insider trading as two separate crimes. Like you've got two crimes, you've got market abuse, you've got insider trading. And they use the term abuse, market abuse, instead of market manipulation. I think that was used in the CISI introduction, International Introduction to Securities and Qualification. So most students who are coming from that qualification say, okay, fine, we've got market abuse and we've got insider trading. In reality, and actually this is more true, insider trading falls under market abuse. So insider trading is under market abuse, of course, and the second one is market manipulation. Both insider trading and market manipulation make up market abuse. And that's why if you go through the book, you'll see the EU MAD, the Market Abuse Directive. Once you see the word directive, you should know that this is an EU regulation. And this covers insider trading and market manipulation. So what is market abuse? Behavior involves misuse of information intended to obtain an unfair, illegitimate advantage over other financial market participants. And this, you can see, basically just define insider trading and market manipulation for you. The term market abuse covers a wide range of bad behaviors, generally summarized as insider trading and market manipulation. What is insider trading or insider dealing? Buying and selling of securities on the basis of non-public, price-sensitive information. You don't, and by you here I mean the criminal, you criminals, you don't need to make a gain. So even if you did insider trading and you didn't profit, you actually lost money, you've still done insider trading. So you're still going to be punished. A market manipulation, deliberate, illegitimate attempts to move a market price. An example of that would be spreading rumors. If you want the company price to go up, you spread good news, good advantageous rumors. If you want the price to go down, of course, you spread negative rumors. And this happened in the UK a while ago, a few years ago. I don't know, was it like 10 years ago, when two brothers, they were shorting a stock. So obviously they wanted the stock price to go down, but instead the price went up. And when the price goes up and you're short, you lose. So they started spreading rumors that the company is going bankrupt, and the rumors started spreading. And they were finally caught, although it's incredibly difficult to catch market abuse. That's why we hear about most crime on the news or on reports or in books recorded with the criminal's name and the time and date. But with market abuse, it's extremely difficult. And also there is a general sense that you get once you study financial crime, when you study compliance in general, and that sense is criminals generally are always one step ahead of the law. The law is always playing catch up with these criminals. More crime. We are giving you lots of ideas today, huh? Suddenly, starting from next week, the number of crimes in the UAE is going to go up. Financial crimes. Bribery. to induce a person to perform a certain activity illegally or improperly, induce, give him money or a certain asset, grease the wheel. In many countries around the world, especially when it comes to the government, there's no way you're going to get any paperwork done without inducing that person. And of course, we will cover bribery in more details. It says here it takes many forms and can be of any size. When it says here it takes many forms, let me just expand a bit on this. You've got the active bribery, and you've got the passive bribery. The active bribery is the guy who walks in, the rich guy with the money, flashing the money. Passive bribery is the person who's accepting it and who is performing that activity in return for that inducement or that bribery. And of course, the UK law and many laws around the world, they punish both active and passive. So paying the bribe and receiving the bribe are both punishables in many countries around the world. And it can be of any size. So I can just give you like 1 dirham, and then please move this application for me. So just because it's only 1 dirham doesn't mean that you were not bribed. You have been bribed. And that's why you see many companies have gift policies to sort of draw boundaries on what is a gift and what is a bribe. Corruption? Bribery is a type of corruption. Is probably one of these things that nobody can completely or clearly justify. If I say this person is corrupt, what does that mean? There's so many things he could have done. You can't just put your finger on one of them. Bribery is a type of corruption, for example. So you can see that CISI tells you that there is no single definition for corruption. But CISI uses the definition from Transparency International. It's an international organization. Defines it as the abuse of entrusted power for personal gain. It's not just a political power. It can be even power in office. I mean, if you've worked in the corporate world long enough, power gets into some people's mind. He's an assistant manager today. End of the month, he's promoted to manager. He is the emperor of the universe, and you will bring slashes with him into the office and whips, and he will suddenly change when he is made manager. And power corrupts. So it comes, probably this is one of the reasons why Transparency International used this as a definition. Power corrupts. Corruption was initially seen as a bribery-based offense, but it has evolved. It has developed. It has grown. It has been upgraded. Bribery is carried out for direct personal gain. Why am I bribing this person? Because I want him to move a certain application for me. That application should not be moved, doesn't meet the legal requirements, but here's 1 dirham. Please move it for me. And now bribery is considered as a subset of corruption. And this is something that you might be questioning. Bribery is a subset of corruption, or corruption is a subset of bribery. Corruption is a much wider offense than bribery. And it covers personal, partisan. Partisan usually means political. That means you're doing something for the benefit of your political party. So political party. Or third-party benefits. Example of this would be conflict of interest. It can be somebody, you're supposed to act in that other person's interest, but you abuse your power and you take money so that you benefit and not the other person. And of course, misuse of public resources for personal benefit. We can talk a lot about this. We can give it so many different definitions, but probably just, embezzlement. This can be defined as embezzlement, a term that we hear a lot in the news, but we don't know about. The resources are supposed to be dedicated or used for a certain function of the government, and you take them and they use them for your personal benefit. And when it comes to corruption, once we cover corruption in more details as we move on, we start looking at corruption of politicians and non-politicians, and we dive a bit deeper into political corruption. Because once you say this person is corrupt, the first thing you ask is, wait, he's a politician? Somehow, politicians have managed to make corruption synonymous with their name. So, sanctions, international financial sanctions. What are sanctions? They stop a company from transacting with the target of the sanction. The target of the sanction can be another company. So the target of the sanction is basically the blacklisted. That's what we mean, the blacklisted person. And when we say blacklisted person, legal terms can be company and it can be an individual. Because in the eyes of the law, a company is a person. It can have a bank account. It can go into contracts. It can pay fines. So it stops companies from transacting with the blacklisted persons. And firms require sanctions screening processes to comply. Probably there are dedicated, or let me just use a better word for this, specialist software. I think one of them is called World Check, that financial institutions pay a ton of money for. The compliance manager goes and checks whether that individual is on the sanction list or in the blacklisted or not. If you are just joining us now, please type your full name so we can take your attendance. I have noticed that many of you are logged in, but you didn't type your names. We cannot confirm your attendance if you don't type your names. If you've already typed your name, please don't do it again. No need. I've already taken your attendance. If you haven't typed your name yet, please type your names. Or if you cannot type it, open the mic and confirm your attendance. Data protection. If you've been following the news, you should be probably aware that Google has recently been punished by the EU for not following the GDPR regulation, the regulation for the protection of data. And because of that, some of their services, I think like Google Analytics, can no longer be accessed in the EU or used in the EU in some way. Anyway, so yes, the General Data Protection Regulation is a law that came out of the EU recently, a few years ago. And it applies to firms in the EU and organizations located outside the EU, but provide services to individuals in the EU. So even if you are outside the EU, like Google, they are based in the US, but they provide services to the EU, or they gather data on EU citizens and companies, then the GDPR laws applies to them. And under the GDPR regulation, you need to process personal data of persons, both individuals and companies, that meet the requirements of these regulations. Personal data includes information related to a natural person means a human being, or data subject that can be used to identify or data that can be used to identify the data subject. Fines are tiered, so there are levels, and can rise to up to 4% of annual turnover. Imagine if you're Amazon, 4% of your annual turnover is what? $40 billion in fines. or $20 million, for example, if you are a smaller company, whichever is higher. And yes, we have seen questions, and there are always questions on what are the fines, what are the jail terms, and what are the fines that you are going to pay. As we move on into the next few chapters, you are going to see all the different fines, the amount of jail, not the number of years that you're going to jail, the amount of fine that you're going to pay. There is a lot to memorize in this qualification. So you notice that on this page, 4% of your sales or $20 million, whichever is higher. More financial crime, tax evasion, and tax avoidance. What's the difference between them? Tax avoidance is actually legal. I mean, we don't have income tax here or capital gains tax, but if we have taxes, if we have to pay taxes, next year we're going to have corporate tax. You'll start seeing companies dedicating more time to understanding the laws in order to find ways to reduce their tax liability, their tax obligations. And that's fine. And politicians know that. Governments know that everybody, individuals and companies, will try to reduce their tax obligation. That's fine. Tax evasion is illegal. Tax evasion is when you know that you have to pay the government, let's say, $10,000 in tax, but you end up paying them $8,000. The difference of $2,000, that's illegal money. And the moment you start using that money, you have committed money laundering. So tax evasion is one of the very popular predicate offenses that give rise to money laundering. And many other CISI qualifications, you'll see CISI might ask you on which of the following crimes give rise to money laundering. Tax evasion is always one of them. Even though technically for us here in the Middle East, because we don't have tax, we don't imagine that tax gives rise to money laundering, even though it does. So the fundamental difference is that of legality. Tax avoidance is legal, well, of course, unless it's aggressive. So tax avoidance is perfectly fine unless it's aggressive. Tax evasion is bad, deliberately misrepresenting in order to avoid payments of tax. So if they say that you have to pay 5% of sales to the government, so and you've sold 100,000, but you say, no, I've sold only 70,000. This way, your tax obligation drops. This is misrepresentation, which is a form of fraud, right? So the government trusted you and you stole from the government. You're supposed to pay them tax on 100,000, but you pay them tax on 70,000. That's a form of fraud because there was an element of trust. Tax evasion is also referred to as tax fraud. There you go. Please keep this in mind. We're now starting to see how these different types of crimes are interlinked. And tax evasion is a criminal offense in the UK. What is a criminal offense? Let's just differentiate between criminal and civil offense. So the difference between them is very simple. Civil offense, you pay fine only, let's say, parking, you double park, or you don't pay for parking, you are fined. That's a civil offense. Sometimes some of them are called misdemeanors, small offenses. Criminal offense, there is jail time and or fine. If you're lucky, the judge will give you both. So money laundering involves tax evasion since criminals willfully avoid paying taxes on illegal income. Do you get that point? So you have obtained cash illegally, right? you're not going to tell the government, even though you're supposed to pay tax on it. That's income or that's capital gain. So technically, you have to pay tax on that money that you gained. But because you didn't disclose that amount to the government, you have committed also tax evasion. So you've committed a crime by selling drugs, and you did not disclose the amount to the government, so you did not pay tax, so you've committed tax evasion, and you've deposited the money in the bank because you still want to transfer it somewhere else, money laundering. I'm telling you, drug dealing is a tough business. People think it makes a lot of money, but I don't dare do it, because they will find so many ways to jail you. You just start hearing, for doing this, 10 years in jail, for doing that, 7 years in jail. You end up spending like 700 years in jail. The general anti-avoidance rules, because people and companies started abusing these tax avoidance laws, trying to find ways to take advantage of these. So they started almost paying zero tax. I mean, you hear it, right? Amazon paid zero tax in Ireland. And for everything that they sell, they paid zero tax. So you know that's not me trying to avoid tax on my salary. That's Amazon avoiding billions in tax, and that is aggressive tax avoidance.